Market's either in trend or it's ranging. That's it. When it's in trend, you get pushes, pullbacks, things of that nature. You get a push, a pullback, a push, a pullback, a push. Now, you think about the concept. Don't actually think about, okay, well, what does it actually look? No, no, no. You're going to figure that out as you look at it and go, okay, yeah, that looks like a trending market to me. That's all that matters. It's not what it actually is or how right you are or anything like it. It's what does it look like to you so that you can actually start making a a educated guess on where things are going to go. Trending markets, when you have a push, a pullback, a push, a pullback, in order to be a trending market, this pullback cannot break below the previous push, the point of that start. So that's where when I'm asking like, okay, well, where would you get out if you decided that this was a trending market and this is going to go up? Well, if price decided to break below this area and start going down, that lets you know it's no longer trending in the direction you wanted it to go. Therefore, that would be a good area to get out. Where do you want to take profits? Well, if you're in a trending market and it's pushing and then it pulls back and then it pushes again, by all technicality, it's going to pull back at some point in time. You want to get out before then. What does that generally look like? If you're looking at the market and you can see consistently that you get a push, a pullback, and about an equal push, and then a little bit deeper pullback, but then it's still about an equal push when you look at this push and this push. Asking for it to go to $220 per share, you're stretching it now. You're asking way too much of the market. It's got to be reasonable within what you're looking, the context of what you're looking at. So that's a trending market. You can have it trending up, you can have it trending down. Trends all depend on how you're looking at it or how closely you're looking at it. By 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 just looking like this is a trending market. It's not as clean as this as far as pushes and pullbacks, but it trends. It's pushing up, it pulls back a little bit, it pushes up, breaks that high, pulls back a little bit, pushes up, breaks that high, pulls back a little bit. Never does it actually break below the low of the previous push. And so this is a constantly trending market. Cool, we got that. So now we have that. That's a trend. With a trend going, you have all of these. It's if it's starting here, then it breaks up into a high here. Well, it's you don't know that this is the finish of the pullback until it breaks that high. So until you get that, it could pull back as much as it wants to, as long as it doesn't break below here, or wherever you decided to be like, this would be my point where I'm no longer convinced it's in a trend and I should be out of the trade at that point in time. My idea is wrong. And so you're fine. You're fine. If at any point in time price started to pull back and you're like, I'm going to take a buy here, and if price breaks below here, I'm done. I'm out. Well, then as long as it stays above, you're good. Stay until it actually, it actually makes sense. That or the market starts telling you something otherwise. You're starting to trend and you're still in trend, but all of a sudden, if it starts coming back and breaking the lows that it's not supposed to break in order to remain in trend, well, that should let you know you might want to go ahead and get out of the trade early instead of waiting it come all the way down. So it's like that's a trending market. The other market type that you have is just a ranging market. It's just where it's not going in any clear direction, but it forms good support and resistance. And so looking at a ranging market, we would have something like this. So I consider a ranging market anytime you tap something twice, both support and resistance. So price came all the way up here, tapped this area here, pulled back here. Now, when price came back up into this area, granted it broke through, but immediately broke back in, this is what you would have seen there. I'd have looked at that and gone, okay, if it comes down here and taps us again, this is a ranging market. We were in trend before, but now we might no longer be in trend. It might be rolling over. So what do you do in a ranging market? Well, you just play the top and the bottom. So once price came down in here and started to show whatever you saw, rejection, anything like that, saw hesitation in the candles as it was forming, or maybe you went down to a lower time frame. Like there's all sorts of things, or maybe you just get in, period. It doesn't matter. It's like, okay, yeah, I think the price is going to go up. We're definitely in an uptrend from this point anyway. So it's like, if price can come back here where it should not break to remain in the uptrend, then as long as it stays above this, I'm going to stay in. And then, yeah, there you go. If you would have just went for the top of that, $100, you would have gotten $260. So it's like, and then it's the same thing here. It's like once price came back in here, here's my range. Price, wick through. It's like, okay, I'm in a range. I'm just going to play the range. I'm going to play the odds and play the range. As long as price stays above the range, although it's as high as it's gone up there. So as long as price stays above there, I'm good to go. And I just need to target the other side of the range before it decides to turn around again. That's all I want. And eventually you would have gotten there. So those are the two markets, two basic market structures, trending markets and ranging markets. And those are two different ways to trade trending markets and ranging markets. So with that knowledge, and that's as dirty as simple as it needs to be. In a trending market, you're making highs and lows, and as long as you do not break the previous low that created the high, you're considered still in a trend. And at any point in time during these pushes, during this push here, at any point in time, you're like, okay, now price I think is going to continue up. If you got in here, if you got in here, you got in here, it doesn't matter as long as you sort of stay safe below here, because this is not violated until that low is broken, and that's pretty much it. That's all it is. You look at it and you go, okay, where would I have gotten in if this is a trending market? Where do I think this is going to go based upon what the market's shown me? And you use the context of the market. That's all it is. You don't have to understand the fundamentals behind it or why news and blah, blah, blah. You don't have to understand all. I don't understand any of that, and I don't care because I don't need it. Every single one of these trades that I've placed on Solana, which has been actually my best cryptocurrency to trade, has been very much the same thing. It's like, I think price is going to go up. Price has been up from here. If price comes all the way back down here, well, then I want to be out. Why? Because look at what price has been doing. It's just been channeling up. If price were to come all the way back down here, it's broken out of this nice little channel it's been going, or this trend it's been going all the way up. And so I just get into a trade. That was the first trade I ever placed. Here, price came down, wouldn't go up, came down, didn't go up, came down again to this area. I'm like, okay, cool. This seems more rangy. I'm going to trade the range. We bounced out of here. I'm going to take a trade as long as price stays. At this point in time, I was being a little more aggressive. As long as price stays below this area here, I'll stay in the trade. If price comes and hits it, then I'll go ahead and close my position. But I also had in the back of my mind that this has been in an uptrend. So if price decides to break, it's more than likely going to go ahead and break. And so I can target a little bit more. And so I did. Same thing here. This was on a lower time frame, but it's the same concept. Price came up, came down, came up, same area, came down. I'm like, okay, cool. I'm in a range. We've made a new area, a new structure and whatnot. It's like, okay, if price is going to go, it's going to go right now. I'm going to go ahead and get in. And so I got in. Same thing here. Price was at a level. This was a level that was way over here. And it's like, same thing. If price is going to break it and go, here's my support. If it breaks below it, obviously my plan is done. And I'll just target the next higher level. And since Solana's been playing nicely like that, that's how I've been playing it. This got a little bit choppy. This was the areas that I actually lost in Solana, or at least gave back some of my profits in Solana. It was the same thing though. Supports and resistance. And I'm like, okay, I'm going to play the range. Is this really the range? That's what I was playing with. Obviously not. I would have been safer to play down here, but it is what it is. I took a couple losses, a couple breaks evens and whatnot and everything like that. And then I had these trades here where it had bounced off here. It's like, okay, cool. I'm now going to zoom out instead of playing very, very close. I'm going to zoom out and see what's going on. It looks like we're in an uptrend. We should be trailing up higher. I'll get in. Price had finally came all the way back after all this stuff here. And I'm like, I don't think it's actually going to go up anymore now. I think it might actually roll over. And I actually got out early, even though it actually turned around. Okay, it happens. What happened, as soon as I saw it starting to turn around, I looked for an area. It's like, okay, price bounce there, there. If prices can stay above here, then I should be safe. Boom, got in, held it. Same thing here. Price cracked about here. It wouldn't go any higher. It wouldn't go any lower. Finally get a good strong pin here, a pin there. And I'm like, okay, This looks like it's not going to go any lower. If it's not going to go any lower, there's a high probability it's going to go higher. And so I took a trade there. It does not have to be as complicated as you like. It can be simple. You just look at it and go, I think it's going to go up. Okay, cool. Find yourself a safe spot that you'd go, okay, my idea no longer makes sense if it gets to this point. Cool. Now, based upon what the market's done, where's your profit? Now, that doesn't have to be, it doesn't have to be much, but you can't go crazy. You can't expect these little pushes like that, even getting these pushes all throughout this time. If you look and it's like the push here to here is the same distance as that one I just had before I lost it because I ungrabbed it. You know, that push here is about the same distance. That push here is about the same distance. This is about, I mean, we're pushing up higher. But if I were to get into a trade and then all of a sudden expect price to just skyrocket when it's never done it before, that doesn't make any sense. So you have to keep it in context. And that's that. So when I ask you a question about, okay, where would you get in? Where would you get out if it went into profit? If you get into a position right now, you're like, hey, I think it's going to go up. Okay, cool. Where would you get out? And then if it decides to go against you, where would you say, okay, my idea is no longer valid? And then that's it. Once you have those two things, you've now created the start of journaling what your eyes see. And it's not right or wrong. There is no right or wrong on whether or not it happens. Nobody knows what's going to happen. But what you can do is you can start to see how often your intuition about what you see is right. And then as you go down further, you get to tweak your intuition. You get to learn from your experiences. And then all of a sudden, before you know it, you've gone from either losing to break even to profitable with just that time. But it's the experience. That's what I'm trying to get you to get in there and get the experience. So that's all you need. That's really it. You don't need to understand. You just need to look. Visual recognition. That's it. But it's tailored for you. This is why I can't teach you how I'm like, why did you see? I just felt like, okay, yeah, this looks like it's going to go up. Why? Because I've just seen it. I have no valid reasons to explain why. It's just given what I've seen, it's like, yeah, price is more likely to go. And that's really it. It's more likely to go up than it is to go down. And when I win, I'm winning to 1.4 times than what I would lose. And when I've lost, I've actually lost less because I was like, okay, now I no longer feel it's going to go up. Given what it's done, like this one skyrocketed all the way up there and I missed it. And this is the level, but my TP was a little bit too high. And so it came back down. I'm like, okay, I no longer feel it's going to go up based upon that. Did it do it again? Yeah. But once again, my take profit was a little too high and it rolled over on me. So if I had a little bit more moderate positions, if I was just going for 1-to-1s, I would have hit it. Yeah, would have hit them both. But, you know, it is what it is. You play the odds. So don't overcomplicate it.